So first and foremost, traders, algo enthusiasts, I'd like to welcome you to an ARC product launch for the ATR Vol Trader. As we do with all webinars, we record them. We will send out those recordings post-event so that you can have a copy of it to review later. And I do have a team in here to help assist with questions, go over any details. If I don't answer your questions, it's not because I'm ignoring you. It's because I'm just staying on topic. We have a lot to cover and I want to get right into the demos. I want to get right into the details, the meat of the presentation. And we'll stay at the end here. We'll definitely go over the discount, the opportunity that we have for whenever we do a product launch is always the best time to be able to get into what we're doing and use the tools that we've built. But like every algo that we've produced or we continue to produce, each of the systems is designed for specific reasons, right? That's the whole focus of an algorithm. That's the whole focus of an automated trading robot. And that's exactly what we're going to be doing today. We're going to be talking about how volatility is the driver here. This is a volatility algo. And there's some hidden math behind this quant system. And I'm excited to kind of share this with you because a lot of times traders don't realize what's right there in front of you that you can exploit for opportunity until you actually put it in the lens of an automated system and you can back test it and you can optimize it and you find those hidden gems, right? So before we go any further, I do need to cover a quick disclaimer because obviously we are talking about strategies. We're talking about performance. I want to make sure that you guys are aware of the risks. So can you do me a favor? I believe we're all adults here. Just give me a yes in the chat box if you agree to the risk disclaimer so we can carry on with the presentation. Excellent. Fantastic. So now that we got that out of the way, I don't know where you are. I do recognize a lot of familiar names in here. There's just way too many people in here for me to name you all, but I see a lot of familiar names. So thank you for those of you that are repeat customers and that are here on a regular basis. But I do recognize a lot of newbies. And in fact, we do have a whole lot of new algo traders that have been coming into our community, our Discords, our customer user base. And it excites me because it gives me an opportunity to help a lot of new people off in the right direction. How many of you are new in here? Can you guys just type an N for new? You're new to automated trading. You're new to algos. You're new to essentially getting started in this industry in terms of automated systems and back testing and optimizations and all that fun stuff, right? We got a lot of new people. So this type of an event is going to be for those of you that are looking for help. Everybody wants a good strategy. Everybody wants better performance. And a lot of you got into automated trading because there's better ways to do things. A lot of times there's that human involvement that kind of becomes a roadblock, right? Human emotion, execution, speed, efficiency. And then most importantly, being able to just manage risk better by knowing, is there a track record of historical performance that the automated system can show you that it's been doing well in the past, right? Nobody has a crystal ball. Nobody knows what's going to happen in the future. But if you have evidence that it's been consistently doing well in the past, and then you can run that through out of sample data, which we'll talk about today, which is a really key feature of today's presentation, is being able to correlate out of sample testing to be able to validate if you have an edge. So this event is going to be just that. In fact, I've specifically built some out of sample testing scenarios to be able to show you the stability of this system. And I think it's really, really amazing to do that. It'll be a good learning curve for those of you that don't know what that is and that are interested in learning how important that is, right? Real-time performance, out-of-sample performance versus backtesting performance. And you're in the right place. Now, there are a few of you that are have been bitten by the bug of negative energy. Not everybody has had a good run in the markets. Everybody's faced losses. Some of you guys have chip on your shoulder, or maybe you're struggling and you're just getting sick and tired of it. You just, no matter who you listen to, you just get pissed off because you're like from webinar to webinar and you're like, hey, all I do is buy crap and I'm tired of getting crap in my bank account, right? And how many of you guys can agree that, maybe you're in that environment? You're getting sick and tired of, just kind of going around and round in circles, not getting anywhere. I get that. But one thing I can promise you is that the only way to get out of that is to be willing to learn new things, to put the past behind you, and to let go of what's not working for you, right? I have a few traders that have purchased many algorithms, and all they do is focus on the ones that they love the best and the ones that they prefer trading the best, right? Not every system is meant for every style of trader, and not every strategy is meant for every type of trader, right? So that being said, I don't think that anybody in here belongs on this page. I think that if you're here, you're willing and you're open-minded to learning and becoming better. How many of you guys are open-minded and open to becoming better and making more money? Just give me a yes in here, that you're willing to learn new things. You came here not just to look at buying products, but to advance as a trader, and you're always trying to get ahead. Okay. Excellent. Excellent. Well, my job as an instructor is to help you. Okay. Now I'm on a quest. And, you know, I think every man in life, every man and woman has a journey. And I tell you, I decided years ago that I was going to beat the financial markets. And I didn't just mean it as a trader. I meant it as a developer, as a quant, as a systematic mentality thinker. I'm very math-based. I like looking at things in a very linear fashion. I don't like subjectivity. And that's why I've taken a very big passion in quant trading. I love quant trading. If you don't know what the term quant means, it's algorithmic trading, automated systems, mathematical approach, machine learning, AI, you name it. It all fits into quant, right? If you just want to use the term quant, it's probably the best way to sum it all up, right? And my quest is very simple, right? I will consistently be building and producing systems that have an edge in the market. I will consistently be producing architectural software that will help traders make money. That's my passion. I love building systems. I love providing tools and resources to traders to see them succeed. And when we roll out a product like this, is because we've accomplished that. We've accomplished building a system that is efficient. Now, every system is different. So what's really unique about what I want to talk about today is that the majority of you are trying to work for prop firms. I would say 80% or more. How many of you guys are either A, trading a prop firm account, B, trying to get funded, or C, interested in that? Give me a yes, that is up your wheelhouse, that you are in that mindset, you're in that environment, okay? So this is an argument, and I'm going to kind of start here, is that a lot of traders, when they see us post results for strategies, they start having a bias. Oh my God, the risk reward ratio is so skewed against my bias, right? Or I don't know how you could risk $1 to make 30 cents. Well, I don't know why you would risk $1 to try to make $4 when you never make $4, right? Like, so many people have unhealthy belief systems around what really good strategies are, but yet they never achieve success because they're in a pigeonholed environment where they don't actually learn new concepts. Now, I'm not here to tell you that I'm here to skew your beliefs. I'm here to teach you new concepts, and you can choose whether you want to adapt them or not, or be left behind. Right? Quant trading does not pick favorites. It is really about statistics. And one of the things that we've done here with this system is we've built a strategy that uses very simple volatility concepts to be able to trade break, retests, or pullbacks. And you're like, well, what the hell does that mean? Well, I'm going to show that to you today. Okay. But what I've done is I've built templates specifically, which I feel are meant for prop trading. Right now, I have other templates, and we're going to be sharing these other templates with all of you that are very high R multiple templates for big trend trades and for big swing trades. But those will not be applicable to you if you're trying to get funded and maintain the trailing drawdown status. So I want to talk to you a little bit about that into the details today. For those of you that are trying to get through the evals and pass the prop firm accounts, I want to make sure that you got tools that are going to be able to help you do that. Okay. So by the end of this event, I am going to change your mindset around volatility. That is a given. What I'm about to show you today will shift your paradigms. Most of you won't even think of the market the same way anymore. Okay. And I'm going to use the rubber band effect, no difference than profiles does. Auction theory is very similar to this. And we're going to get into the nitty gritty of that. So you're going to definitely learn a little bit about standard deviation, mathematical statistics, and how the market uses that for mean reversion and for trending markets. I'm going to get you to get rid of the stuff that's not working for you. If you're in here right now and you're a discretionary trader and you're trying to find a better way, then I can assure you that this is going to be an alternative method that you're going to want to look at, right? And I've pre-built templates. So one of the things that I always try to lead with is, you know, it's one thing to learn the software, but it's another thing to take it out the ground and just start using it right away. And then, you know, come to some additional training. We want to make sure that you can start using the tool right away without having to try to reinvent the wheel. And so one of the things that we're going to do is to provide you with those resources. Now, I really believe in testing, but I also want to make sure that everybody knows how to do the right testing. Tomorrow, what we're going to do is we're going to spend some time on testing in the AMA. We've got an AMA tomorrow that's going to be breaking down this system and all of the members that are using the product. So if you're using the tool and you decide to use it, we're going to go through that optimization process tomorrow in the deep dive training. We're going to do a little bit of more of a deep dive training on the templates that I've built and really show you how to build your own templates around it, which are extremely efficient. And I'll just basically make sure that, you know, I can teach you how to fish so you're not dependent on me or anyone else. Right. And I can assure you it's really quite easy once you learn how to do it. I know it may seem overwhelming to learn how to test and optimize systems, but once you learn from somebody that makes it simple and very easy and methodical, I can assure you it's very simple. And like I said, we've already built the templates for our strategies, so you don't have to worry about just trying to figure it out right away. We'll give them to you pre-built. Okay. So I want to ask you, what do you see here on this chart? Like just, it's just a picture of a chart, but I want to ask you, what do you see here? Can anybody here just give me I'm going to give you guys a minute or so to kind of write down maybe some of your answers. What do you guys see here? It's not VWAP. It's definitely not VWAP. Auction levels, support and resistance, ATR. Okay. Standard deviations, channels. Okay. Yeah, you guys are all no moving averages. You know, chop. Yeah. Okay. So do you see how serious it is for me to make sure that if I had 100 traders and I've got over 150 people in here right now. Okay. And I never had more than 3 of the same answers. That's scary. That's scary because everybody has a different view on the market. Isn't that what makes the financial market so unique? Is that every single day it's completely different. No matter how much we try to put it all into the same box, no matter what we do, we will never be the exact same. But what most people don't see here is hidden math. Hidden math behind this. Now, I know everybody's mindset went to the indicator. And I did this on purpose, right? I did this on purpose. Because if I were to take, let me just grab this for a second. Let me 1 second here. I'm going to just see here if I have a chart. There we go. 1 second. I'm going to just move that over here. So let's just take this for a second. I was going to grab this chart here for a second. Now, I'm going to just create a chart of the S&P just for the sake of an example. Let's create a Renko chart. Let's keep it super easy. Right? Oh, this loaded like that. Now, what do you see here? Price action, right? Now, if I zoom up a little bit, what do you see here? Different price action. But it's a different story, right? Like if you look at the price action right here down on the bottom right of this screen, it's really tight. Up here, it's really large swings, right? So I want to talk a little bit about what's going on. And there's 2 things that are a constant in the market. 2 things. What are they? Anybody here want to well, let's just go into this for a second. What do you think is a constant? What never changes? volatility, which is just till volatility. You guys get the picture, which equals movement. You need movement. You can't have movement. You can't have the market making money on one side or the other unless price goes in one direction. The only way you make money from a stagnant market is by selling and having exotic options that make money from no volatility. But we're not in the options business here. This is a quant event. So volatility is important, and volume. Okay. So what we're going to do is we're going to remove the volume from this event. We're not focusing on volume in this event. This is 100% based on price action. This entire algo that I'm going to be showing you is based on price action. Now, sometimes, let's say you have two people here. Person number one, and you have person number two. Okay, A and B. And let's say this guy is holding on to one side of a rubber band and this guy's holding on to another side of a rubber band. And there's a little line between them. We'll call this the band. Okay. Now, what happens if this guy starts walking this way and this guy stays still? What do you think is going to start happening to that band? Tension starts getting a little bit expanding. You're going to start getting a little. It's going to get harder. It's going to get you're going to have that gravitational pull is going to want to pull you, right? Like it's, you know, and then eventually, let's say he just keeps going this way. Keeps going this way. Two things are going to happen. Either the band is going to break and this guy is going to fall flat on his ass, or it's going to whip him right back into the center. Right? It's the study of statistics. It's called mean reversion. In fact, when you look at an auction, a profile, or a market distribution, if you go to stats class 101, statistical mean reversion, 1 standard deviation, 2 standard deviation, 3 standard deviations. We used to teach this in profile classes 101. I'm sure you guys know. If everybody is on the top of the hill, you've got two people standing up here. Eventually, the old bell curve, John, exactly. But it's mathematics. You cannot get away from it. It's the underlying effect of, it's like the Fibonacci sequence. It's always there. It'll never be not there, right? And so when you think about mathematics for this, if one guy starts walking down the hill this way and one guy starts walking down the hill this way, eventually they're both going to get sucked back into the mean, or they're going to break and they're going to slingshot further. So when you have a market that is going sideways right now, guess what that is? That's the same as you've got two people that are standing here like this, and they're getting ready to do something. And then eventually they go in opposite directions. These two people could be considered supply or demand, or order flow, or buyers and sellers. So when you see a market that is primed like this, I want you to think like this. These are two people sitting here battling over what's going to happen. It's not really battling. It's more of the market is staying between these price points because of the companies, the institutions, the banks that are holding the market there, because there's no fundamental reason to move the price distribution in one way or the other. However, if the market just goes like this, zip, and goes out like that, two things are going to happen. The band is going to break, and the market's going to move this way, and it's going to trend and maybe oscillate up here later. Or the market's going to go like this. The band isn't going to break. It's going to suck back in here. Okay. Does this make sense? Is everybody kind of with me on this? This is kind of price action 101, the market movement 101. If we look at, you know, these big swings in the market, that's traders, that's us stretching that band, and whoop, it didn't break. Stretching that band, whoop, it didn't break. Because when you have a trending market, it's because the band is broken. The only thing that is going to give you a trend is fundamental information. So let me kind of reverse engineer what futures are. Most people don't know. They think it's a day trading leverage industry. In fact, it's a hedging industry. Futures is a hedging industry. It's used to hedge stock market portfolios. It's used to hedge commodities and metals. Therefore, when the market's not moving, it's because there's no fundamental reason for that hedge market to move. And so when you think, well, how does that apply to this algo? Well, it has everything to do with today's conversation, because what you're seeing right here is a picture of volatility bands that are based off of average range. And I have the ability to control these volatility bands to be as loose or as macro as I want them to be. And you know, the best part about building an algo around them is you let the optimizer tell you how to set them. This is where you use mathematics to kind of tell you what to set your software to. Now, what I'm going to do is I'm going to talk to you a little bit about what's unique about what we've done. The red line and the blue line, these are average range, ATR volatility stops, okay? This is an ATR volatility stop. But what we did was we created standard deviations, no different than a bell curve. We put standard deviations around volatility. Why? Because every time this is a level of resistance. But that doesn't mean you're going to always hit resistance to the tick. Sometimes there's this hidden force field around volatility, okay? And then basically what ends up happening is the market will come into these areas and it will not necessarily hit this. It'll hit this instead. It'll hit this instead. Sometimes it'll hit this. Look at this. It hits the outer band. It didn't even hit the volatility band. It hit this hidden force field here. Now, what we've done with our algo is we found that it doesn't need to have 3 standard deviations. We've literally just narrowed it down to 1. And what we've done is we've created a volatility algo that looks like this. Okay. Now we're going to go into the automated systems, and Lisa, no, you don't need to be changing anything. What I'm saying is that we've built the templates that already have the pre-configured settings, right? But I want to make sure that if you're going to buy a car, you don't just buy it because I said, here, buy this car. I want to make sure that you understand how to even open the door, you know, before you sit in it, right? So if you look at this, you can see there's this band that's around this area. Now I'm going to change the standard deviation around this. I'm going to go in and I'm going to change the mathematical input, because that's what standard deviation is. It's a mathematical input. I'm going to change the multiplier on this to kind of show you, by changing this to a 2, okay, I can adjust the volatility of that band. Does that make sense? It's like an envelope. It's like a volatility envelope, so to speak. And what we've done in the quant testing is we're able to actually determine how big we should be setting these volatility envelopes around volatility, how big we should be setting these bands to be shifting. Because if I were to say, change the settings here and make this very micro in nature, depending on what you're trading, it can get quite messy. If I really wanted to kind of put this up to, say, a really big macro view here, you can see price reacts pretty heavy off these areas, right? There's some pretty significant impact from those volatility bands. Now, how do you turn that into an algo? Well, we're going to show you. That's what we've got here today. Is everybody with me on this? Everybody understand that? Give me a yes if that makes sense to you. Okay. How many of you guys like math concepts? How many of you guys like volatility concepts? What I found in this system is it was easy. What I like about building quant systems is I like easy things. It's to wrap your head around. Like it doesn't need to be 20 different settings and a whole bunch of different. I like setting things up and just letting it run. Like, and obviously there's different markets and there's different time frames you can use, which is why I've pre-built the settings on the S&P for this example, and then we'll do some NASDAQ testing and some crude testing in the next event. But what you're seeing here is these are what we call reversal breaks. When the band breaks, so to speak, it's kind of like when the market moves enough to break the band, it's going to shift the volatility line, okay? And that is going to be controlled by how strict you want that volatility line to be. If you want it to be a very tight volatility band, it's going to break a lot. You're going to get rubber bands. It's kind of like having a big elastic or a small elastic. You can set your bands to be like a small elastic, but then every time it moves a little bit in one direction, it's going to break. You can set it to be big, and it's going to take a really, really big move to break that volatility, right? And what you're seeing here is we have the algo set so that we will take break signals on volatility shifts so that when the band breaks, it's kind of like it jumps on board and it goes for a ride. If you notice, whenever you break an elastic, it always goes in one direction very quickly. Normally, that's going to happen if you have the volatility set right for your market. Okay. So these are one trade setups that whenever we break the band, you will either get long or short on the algo. Okay. The other signal is the retest. When a band breaks, often it will do two things. It'll just go in one direction, which is great for the break templates, or it'll break and retest. And it's kind of like when you look at a reversal, right? If you have a level here, you're either going to do a reversal, and sometimes you catch the reversal and it just reacts right away. And then sometimes you'll catch the reversal and then it comes up and then it retests the market and then it lifts. Same concept. You don't know if this is going to break that band and all of a sudden it's going to slingshot this way. Nobody knows that. But we can trade that and we can test that and we can make sure that we can see which settings provide that most probability answer. But then you can also trade the retests and you can trade the pullbacks into the bands. Does that make sense? So there's two primary signals. There's a break trade and there's a retest trade. And the question should be, well, how do I set the bands? What size setting should we be using? What size volatility setting should we be using? Well, the best part is that when you build an algo, you don't have to come up with that answer. The optimization will tell you the best settings to use for the algo, which is why I love testing. Okay. Does everybody understand the retest trade and the break trade? I want to make sure that this is very, very simple. They're very, very easy trades. The whole point of this algo is it's very simple and very easy. Okay. Any questions on that? Super clear, Bradley says. So, like I said, I don't know where you're at in your journey. Some of you are new, some of you are old. How many of you guys can just put a number here? What is your biggest problem right now out of these 5 criteria? Where do you feel you fit in this environment right now? The truth is, right? Like, are you struggling, second guessing, right? Poor entry and exits, emotions, over trading. A lot of people over trading. Yeah. All of them, John says. Still testing, but 4 and 5, over trading, bad money management. A signal I can trust. Good answer, Ness. Yeah. Okay. All of the above. Well, the reason I like quant trading is because it allows for us to be able to remove this human component as best as possible. You'll never remove human components completely from trading. There's always going to be a tie to the money, tie to the expected outcome. But there's no such thing as second guessing trades in an algo. So if you're struggling with number 1, okay, then you don't have to worry about that, because when you program it, an algo just takes what it's supposed to do. So there's no second guessing. If you have the algo, it's going to do what it's supposed to do for you. So we can eliminate that today with the quant. Poor entry and execution. That's a thing of the past, because algos are meant to execute at a lot faster rates than we can. So we can execute a lot faster. Human emotion. I believe that no matter what we try to do, unless you're special, that there's always going to be some emotional tie. Quant trading will remove it, but we all have a tie to the outcome. Was that fair to say that? Like, yeah, maybe we're not emotionally managing the trade, or we're not sitting there moving the stop line and stuff, but do you not agree that there is some level of emotional connection to, I want to freaking make some money here, right? And I don't want to waste time. This is something that you have to learn. And even with an algo, you just got to learn to just say, be okay. Hey, I had a great morning, walk away. Like I see so many people do well trading, and then all of a sudden they just keep trading the algo. Like, they don't go do things. Like, how many of you guys would agree that if you just took your trades and you'd be done with it, instead of over trading all afternoon, you'd probably be way a hell of ahead compared to where you are? Many people in here said over trading is a big, big problem of that, right? Sitting there tinkering on the mouse, clickety, click, 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 when the morning was great and the afternoon wipes you clean. Money management is a unique topic, and I think that it's not something that you struggle with. It's something that you learn. And it's something that can be deployed differently with every system. So it's not something that I would think it's a problem. I think money management's an opportunity to optimize everybody here in terms of better performance. So I ask these questions not because I'm just trying to sell you some magic potion. I actually, like I said at the beginning, I want to help people. I'm on a quest to build systems, and I want to make sure that you understand how to use those systems effectively. Okay. And why am I able to speak from experience? Because I actually know what it's like to struggle with not understanding how to set automated systems up. I know what it's like to go from one strategy to another before I pick a few favorites. I've built many systems, and we've designed many automated systems, many discretionary strategies. And if you're struggling or you feel like you need help, you're in the right place. But I'm here to tell you the truth. Okay. And the truth is that there's not very many people out there qualified to teach you how to run automated systems. Like, I could probably pick on my hand 5 vendors in the industry that even focus on this. And I personally do not know anywhere else that you will learn quant trading better than what we can teach it to you. I believe that wholeheartedly. Okay. Which means we can teach you with the systems, we can teach you with the optimizations, we can teach you with the back testing, we can teach you how to run the pre-built templates. Make sure that you can use our strategy templates right out the gates. Because if you learn quant trading from someone that is not qualified to teach you quant trading, well, then you're learning from bullshit. End of story. There's no in between. I'm a straight shooter. I'm just going to play it to you straight. Be careful who you listen to, because a lot of the things that you may be struggling with is because you're learning from the wrong environments. Now, we have a Discord of a big community in algo trading. We've got a lot of different algos, and we've got a lot of great traders, and they're sharing templates and stuff. But everybody started somewhere, and everybody started from a place of struggle. And a lot of traders succeed through that struggle. Okay. Now I'm here to be able to take you by the hand and show you what to do. Okay. I'm going to show you how to use the ATRVolatility Algo to make things easier for you, right? There are some other algos that we've produced that are amazing, but they're not as simple as this. This is like the simplest, easiest system to trade. And it's quick and it's effective if you like scalping. And I'm going to show you, because we can set it up differently, and we'll talk about that tomorrow, but we can set it up differently. Okay. So here's some example of it on a range chart. Okay. I have a template I've built for range charts, and it's like little teeny base hits. Like, range charts move based on volatility. Think about this, right? Range charts are driven by movement. So when you apply volatility algorithms to volatility charts, now you're starting to kind of stack some quant mentality behind what you're doing, right? Think about this. If you're using a range or a Renko chart, how do they move? They don't move in quiet markets. They will only move when the market is trading in an imbalance of supply or demand. That's what moves the market. So you can see here, these are retest trades. Now, these are not like, you're going to say, well, wait a second, could I have taken a break trade here? Absolutely. We have different templates that would get you short for that. That is a break signal, but that's not this example. Okay. These are retest trades, scalp trades, base hits. Could you have taken more? Yes. Could you have taken more? Yes. What if I told you we've optimized and it shows that performance tells us that you have a much better edge taking 2 retest trades and then stopping? That's a pretty good piece of information, right? If I can go over 200 trades and tell you that over the last 200 trades, depends on the setting, John. It could take anywhere between 3 trades a day up to 15, just depending on the time frame and the setting you use. Depends on how tight you want to scalp, right? We'll get into the templates we've built. We'll show you some examples. Yeah, because we have a couple that are very aggressive and we have a couple that are very, very liberal. Yeah. Here's another example of very, 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 very tight increments, right? This is an example of like literally getting in and getting out for like 2 ticks. Now, I had somebody made a comment in the Discord. Okay, I had somebody made a comment in the Discord says, well, I would never trade a template risking $1 to make 20 cents. I said, well, why not? If you have a 95% success ratio, if you have 30 winning trades in a row, why, like, what's wrong with taking 2 ticks out of the market? If you design the template that way, right? That doesn't mean you need to trade that way, but we can set the templates up on that. And you can take 2 to 3 ticks out with a 90% accuracy. Who cares about risk and reward ratios at that point? Because that's the difference between a retail trader who was taught old concepts, old mentalities, versus a quant trader that will let the numbers do the talking. Does that make sense? That's the difference between discretionary traders and math traders. Now, I'm not here to tell you one is better than the other. They're both right. They're both right. Somebody that trades for a very high win rate for 2 ticks versus somebody that trades for a very low win rate for 50 ticks, they're both right. But my question for you is this: which one are you achieving the success with? Right? That's the question. Because I know a lot of people that are always trying to swing for the fences, trying to get 2 to 1 and 3 to 1, but yet they never get where they want to be because the market never gives them those big moves all the time. So let me go back into a discussion. And I had this in another algo event, and I want to talk a little bit about this. Okay, I want to talk a little bit about this. How many of you guys remember the gravity example I did? I'm going to teach it in here again. I'm going to keep it simple. And I think it's very, very fitting. If you have a ground, if you have the floor, and you're standing here, okay, and you're going to drop a ball, and this is the floor. Okay, this is the floor down here. What is a guaranteed certainty? If I let go of this ball right here, if I let go of that ball right here, what is guaranteed is going to happen? There's a law of gravity, right? That ball is going to hit the ground. That is a guarantee. But let me give you an example of what everybody tries to do in trading. And this is really, really like, this is the difference between a quant thinker and a retail guy. This is why all hedge funds deploy quant firms versus regular people, because computers can beat people any day of the week. Okay. The ball is going to go like this. Boom, 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 boom. It's going to hit the ground. Okay. And then there's going to be a reaction on this ground. Okay. So as soon as it hits the ground, it's going to do 2 things. Do we know which way it's going to bounce? Is it going to go this way? Is it going to go this way? Is it going to go that way? Is it going to go this way? Is it going to go that way? Like, nobody knows. We want to be able to predict that. We think we have the right indicators to predict that. Everybody thinks that they have an opinion on what the market's doing, trending. Oh my God, the market's going to do this. Your opinions are completely a waste of time because nobody knows. But what you can do is you can basically ascertain that if you think about this in terms of levels of degrees of accuracy, okay? Think about this in terms of degrees of accuracy. You drop a ball down in here. What do you think the degree of accuracy you can predict an outcome here at that first impact factor? It's probably going to be a lot more feasible than try to predict if the ball is going to go over here. What is this demonstrating? What is this vision? I know I'm not an artistic guy. I mean, I'm more of a musician, but what is this demonstrating? It's demonstrating your number one enemy in the market. What do you think is your number one enemy in trading? Time in the market. What if I told you, what if I told you that the longer you're in the market, the longer you have, or the more chance of failure you have? The longer you're in the market, the higher chance of failure you have. And this is the difference between me and everybody else who wants to challenge the status quo, but I will always beat those that will challenge the status quo because I can produce a system that will outperform a human any day of the week. And I'll bet $100,000 on that. If anyone wants to take me up on that, I'll challenge that. As long as you come to me with a 3-to-1 bet. If I win, you give me 300 grand. If you win, I'll give you 100 grand. I can build a system that can outperform a human being any day of the week because I know how to outperform a human being's odds. The odds of success are is I can remove your exposure to risk by removing your time in the market. If I can give you a very high degree of accuracy, okay? If I can give you a very high degree of accuracy and you're able to predict that degree of accuracy on a consistent basis, day after day after day after day, then risk reward ratios mean nothing. Because you're not in the market for very long enough for it even to matter. You're looking for things that happen versus trying to predict what happens. You're basically saying, this happens all the time, I'm going to take a piece of that, versus I don't know what's going to happen, so I hope it works. How many of you guys learned something from this example? This is very favorable to prop traders because trailing drawdowns are your enemy. So the longer you're in the market, the longer you're going to blow your accounts. How many of you guys have blown an account due to a trailing drawdown before? Even the best traders in my community have blown their accounts because they're egotistical. Ego overrides mathematics. And I don't care how much money a really good trader makes, you cannot overpower math. Okay? So, knowing this, scalpers can set this up to do whatever you choose. Here's a great example of being able to take filters and add levels of filtration to that. You can take higher time frame filters and make sure that you're only taking break trades or retest trades in the direction of higher time frame information, which is very powerful, right? It's very, very powerful when you can basically take a trend from a higher time frame and only take break trades. I'll give you an example. What I mean by that. We'll go into this and let's just try to find the chart. I think I have a chart here. Let's just do it. If I can basically show you an example here of the S&P, okay, and I'm going to basically load like, or let's do crude oil. Let's do crude oil. I'll show you an example. And this is what you can do for this. Let's just take crude on a minute chart. And let's just put it on like, let's say a 5-minute chart, okay? So let's just put crude oil on a 5-minute chart. So what if I told you that you can set your ability on the quant side and the algo, and we'll do this. I'll show you the templates. You don't need to build anything. For those of you like, oh my God, I got to be a rocket scientist to learn this. No, I'm just trying to teach you something that's very powerful. And then I'll just give you the plug and play tools that we've already built for you. So I'll make it easier for you. But I think it's important to learn things that are going to make you a better person and better trader in this. And what is the direction here? Like what is the direction of the market over the past couple of days, with the exception of today? Up, right? Up. So if I know that, let's just go in here and let's just create another chart. Let's just put crude oil on a market. Let's just put this to 5. Okay, 5 days. We'll go back. Okay. And let me just kind of remember, like, let's just go back here for a second. Now, let me just go and add these volatility bands in here that are the backbone to the algo. Turn these off. Now I'm going to basically go in here and I'm going to basically change this volatility setting. So if I know that the higher time frame is up, and I know, yeah, that's okay. I'll delete it. Thanks, John. If I know that the higher time frame is up on the big picture, couldn't you set this up? And I'll show it to you. We'll show you how to set this up tomorrow. Example. Let's just take this and put this to a little bit bigger. Couldn't you set this up where if you know the higher time frame is in your favor to the long side, you can set the algo to be trading long these environments, break trades long, retest long, break trades long, if you know the higher time frame is up. So this is how you can truly take one of the biggest difficulties that I found with all the other algos was having a way to be able to determine bias sentiment. Because one day, if you turn longs only or shorts only, or, you know, the next day you have that set, and then all of a sudden you're like, well, how to, this is the one system that I've been able to build that removes that shit show of a problem. Because let me explain something. You can always have a higher time frame chart like this, super simple, and then basically just turn the algo to do whatever you want it to do, right? Like that's what I love about this system, is that we can tweak the settings on this. Now, I don't want to go into the tweaking today. This will be the AMA tomorrow, and that's the whole point of a 2-day event and making sure. But I want to kind of get you excited about the power behind that, because in situations like this, when you have a trending market, you can sit there and say, well, if I'm trending to the long side, I'm only going to trade long, right? If I take out the lows of yesterday's session, I'm going to trade short. So if I go and I say, maybe I use yesterday's high and low as the auction theory, and I say, if I take out yesterday's low, then I'm going to trade short the algo, right? If I take out yesterday's high, I'm going to trade short the algo or trade long the algo. And you can do this by having the ability to see that and how to throttle that, right? So this is why using a higher time frame filter can remove that. You don't need to use another chart. You can just use the algo engine for that by changing these EMAs to be really large. You can basically say only take break trades on the right side of the big picture trend, and you can turn this to be like a 5-minute chart or a 10-minute EMA, right? Which basically removes the need for you to have to look at different charts, right? And I'll teach you guys how to do that in tomorrow's training, okay? Here's a great example of money management, obviously kicking in. Now we've got the pop-up, so you can turn off the systems for that, right? And this is basically just an environment where if you have certain settings and if the market starts to pull back against you, you can protect your equity curve on doing that. Most of you guys are familiar with some of the engine features that we've done, but if you're new to our algos, we have the ability to create templates, money management filters, everything that you can use to be able to leverage better trading, okay? Let's kind of go in and talk a little bit about some statistical tests that I was running. So this is a test of these. I'll show you the systems that I've got for the demos, but I wanted to show you some screenshots. I was running some tests. This is all the way up from, like, these were all the way up from April to now, 130 trades. Now you sit here and you say, well, Sean, you know, this is interesting. Like, let me just explain this for a second. Somebody looks at this. It's a 0.3 R multiple. That means you're risking $1 to make 30 cents. Yeah, we'll get into that, Mark. Our algo overpowers all the Renkos, so you don't have to worry about it. Most new traders in our community don't know that, but our algos overpower that. We have an internal engine that looks inside price data, so it doesn't matter if you're using a back-testable Renko or not. Our engine overpowers that, so you don't have to worry about Renkos skewing the back test. Yeah. I can assure you that we're well ahead of that. Yeah. So how many of you guys would trade $1 to make 30 cents? Because I'm a scalper, Lisa. We don't look for time of day. We look for number of trades, right? We don't look for months. What happened 6 months ago means nothing. What happened 2 months ago means nothing in day trade. Number of trade frequency. You should be looking at it on a 2-week to a 3-week max basis. Yeah. Risking $1 to make 30 cents, which means your R multiple is skewed against you. But if you have a 93% or a 92% success ratio with a 3 profit factor over 100 trades as a scalper, that's insane. How many of you guys would agree that you guys are trying to get 3, 4x profit factors? It's not easy. It's not easy. Max drawdown. Yeah. That's because you have 16 consecutive winning trades with 1 consecutive losing trade. Max time to recovery is less than 3 days. No, Ben. No, your commissions will not eat you up, right? I mean, your commissions will not eat you up. This is the algo that we're talking about today. This is the test results. I'm going to go in. I'm going to show you some real examples on the charts. Here's another example. Different market, different settings, right? Okay. Here's another market here, right? Different market, different time frame, different settings. 70% win rate, 0.7 R multiple. You can see now these are different test scenarios of the same system, the same engine. Different settings, different templates. These are all the same algo running different templates that we've built for this. Now, what I want to do is I want to kind of go and show you some examples. Okay, I want to show you today. The name is the Volatility Algo, Mark, the ATRVolatility Algo. Yeah, ATR-vol algo. So let me give you an example. I have 3 different examples here to show you. Okay, I have 3 different examples to show you. I have a range chart down here. I have 2 Renko charts. All of them are on the S&P right now because I wanted to use different examples. And let's just start with this one. Okay, I just want to kind of start with this one. This one, we've set it to be very, very big bands. We set it to be very, very, very big bands, which means that if it's going to break, it's going to normally have some follow through in trending conditions. So if I go back, and I just take a look here, I just want to go back to, you can see these are really, really big settings. Now these lines are the start of day, the end of day. Well, let me give you an example here. I have this set to a scalp setting because normally, if this big of an ATR volatility band is going to break, something serious has to break it. There has to be some force behind it. But remember, I'm not looking for it to go through here and go to the moon. I'm only trying to exploit a very small anomaly with a high degree of success. Why? Because I know that if I drop a ball and it hits the ground, I don't want to predict it going here. I just want to predict it going here. Think about this. If I have a target up here, what are the odds of me getting there? Probably not as much as it is getting here. Especially when I have this such a big setting, it's going to take some serious movement to break that setting, which is why you see win and win and win and win in those conditions. Okay. Now, these are outside of the time settings that I have it set for. Quick scalp, outside the time settings, quick scalp. This one had a stop, this one had a win, this one had a win. Okay. Didn't have a trade today. You want to know why? Because the market didn't move today. This system template did not give a trade today because I have it set to really large break settings. Okay. Now, this is just one example of break templates. We have a lot of different break templates we can provide you with resources to and show you how to set them up. That's tomorrow's focus. I'm going to show you how to set the different settings on the bands and how to test them really quickly because this system optimizes very quickly. It's very, very easy to test these signals. And the speed of optimization in these templates works a lot faster, right? Let's take a look at the range charts. So this is the back test for just that template above us here, guys. 100 trades, approximately 81% success ratio over 100 trades, almost a 2 profit factor, risking 0.5 R multiples, essentially. 16 consecutive winning trades in a row, max 2 losers, right? Max time to recovery is less than a week, which is great. You want to be able to recover. Normally, what we try to do is be able to recover in the same week as, let's say your Monday is a drawdown. Can you get out of that drawdown with the algo before the end of the week? We try to keep that to 5 days or less if possible. Most people don't think like that. Okay. Number of trades per day. This one is set to a really big setting. So this one's probably going to take 2.5, 3.5 trades a day. Does that mean you need to trade that template? No, that's just this template we've built. We can give it to you. It's pre-built. Okay. We look at a 2 profit factor. That's a very small drawdown. Like, that's the whole point of these templates, is I'm trying to build things that give you small drawdowns. How many of you guys want small drawdowns? I can give you templates that have big drawdowns. Who wants that? Nobody wants big drawdowns. So this is the breakdown of this. And I don't have data for today on the back test, but this template didn't take a trade today because we have the chart here, because I didn't download the data. But this trade here yesterday took trades. These are all the history for the month, right? And if you look at the distribution of this template, you look at the distribution of the time of day, I have it set. Okay, I have it set. Could you take trade? I don't like cutting out trades. And this is where a lot of people say, oh, you're curving. No, we're not. I could sit there and show a back test in the pre-market and then show you a back test after market open. And I don't care if I have one losing half an hour time period in here, because it's a half an hour. As a quant trader, it's not a really big deal over on the hourly basis, right? Like, the hourly distribution throughout the day is pretty strong. Okay. So this is just one example. We'll show you a couple others. Okay. How many of you guys trade on range charts or are familiar with range charts? Okay. This is today. This is today. Where is the end of it? Yeah. This would have had a short that would have been profitable if I would have extended the time just a little bit more today. So we had today, let's take a look at this. This is what we call a ball trade, like a baseball trade. You know, when I talk to you about, like, you have the floor, you drop it. Like, I'm in here, I'm out here. You say, well, what do you mean? Well, I don't want to be in the market. I want to be, and look, it's not even hitting the volatility, it's hitting the math band. I call these math bands because it's what they are. Think of this as like a force field, like a Jedi Knight. Nobody knows that line is there. Like, if I were to say, well, draw some random line in the middle of a chart, nobody knows why it's there. This is a reaction point, a mathematical reaction point, because of the market's volatility average. Now, that's why I love quant trading, because most people would never look at the market this way, right? When you build systems, take a look at these break trades. I don't have any break trade templates built because I wanted to be able to show you some really profitable retest templates and then spend some time teaching you how to test the break templates, because it's fun to test them. Like, you can get some massive trades, or you can just take some quick scalps, whatever you choose to do on the break trades. For the retest trades, I'm looking for quick bounces, in and out. Right, in and out. So there was 1, 2, 3 wins, a loss. So 3 wins, 1 loss today on this algo. Could have had 4 wins if I extended the time a little bit sooner, a little bit longer. But who's trading at the end of the day? I hope you're not. Right? I hope you're not. It takes a lot of trades. Like, you can set this up. You can set this up to take trades however much, and you can see, like, you say, well, Sean, well, what about all these other trades? Yes, you can set them up to take 5 trades in one direction, 10 trades in one. I have it set to 2 right now because I have tested this template on these settings with this time frame, and statistically, based off the scalp settings that I've set, 2 tests are good. Because why do you think that is? Because the market very rarely does that. Why would I want to build a business on something that doesn't happen a lot? That's not really good odds, right? So here's some really quick base hits. All right, just go back and show you the algo. I mean, win, 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 loss, stop out, stop, win, win, stop. So statistically on this template, right, if you like range, and I'm not saying that this is the only template you should trade range charts on. We could test the NASDAQ. We could test crude. I mean, it's just a very successful template. It's a very, very good template. Let's go in here and take a look at it. And we'll save the best for last. We'll save my favorite. We'll save the best for last. So 0.7R multiple with a 70% success ratio. That's a very profitable edge. Okay. 11 trades a day on average. So if you're somebody that likes to scalp, if you're someone that likes a lot more activity, this would be a template you would want to trade, because you're not going to be shy of taking trades. You could size down and take more, or take a look. Less than 3 days to recovery. That's very, very solid. Okay. From a statistics perspective, this is the time. And now remember, I don't have the data downloaded. So yesterday I had a drawdown, and then today was a winning day because there was 3 trades, 4 trades, 3 wins. So today was profitable. So it would have been more on the back test. So this is the distribution. Yesterday had a stop, big run, stop, big run, stop, big run, stop. And then today was profitable. So very little drawdown is still, well, I've built it this way. Bradley, I've built it this way. I am always trying to build templates with the mindset of the with the mindset of prop traders. What is your order size with this template? 1 S&P contract. Let's take a look. This template is using 3 contracts on that one, but the break trade on the other one was using, I think, 1 or 2. I look at average dollar per trade. I don't care about the contracts. I'm more interested in the average dollar risk per trade. I don't like to risk more than like $350, $400 per trade, depending on the type of program you're taking. Like if you're trading a 50K eval with a $2,500 drawdown, like if you're looking at Apex evals or anything like that, you know, I don't want to risk more than $350 per trade. Yeah. So, well, let me just kind of end with this. Is this making sense to you guys? Like, I'm not even talking break trades right now. I'm just showing retest trades. Okay. So let's take a look at this. This is today. This is today's trading. This was today's trades on the retest algo for the S&P, and had a really stellar day. And a lot of people had a really hard time today trading. A lot of people had a really hard time today trading because the market didn't move, but the market moved enough for this to trade. And this is where I look at is like, sometimes it's not what you do, it's how you do it. There's always something that can be used in some conditions. You can trade it all days, every day you want, John. You just program it to take trades on whatever days you want. It's an algo. It's a computer. You can set it up to trade every day at certain times a day. Yeah. So here's the trades. Quick scalps, quick scalps, quick scalps. Like, take a look at this, right? Like, you say, well, wait a second, Sean, like, let's just take a look at this trade for a second. I'm getting in here. My stop loss is down here, but my target's here. That means I'm only risking, like, I'm risking $1 to make 20 cents. We already had this conversation, right? We already had this conversation, right? Now this is today. Right, now let's go back and take a look at the full test subject of this. Okay. This was the last, let's take a look here. This was the last 134 trades. Okay. And I like it because it's not too many trades, but it's not too little either. Like, it's got a fair amount of trade activity, an average of 8 trades per day. I'm trading in the morning session. So I'm only trading like literally my morning, which is 8 a.m. pre-market, 5 a.m. my time, 8 a.m. Eastern, which is pre-market, up to 11 o'clock Eastern. Like, that's amazing. Like, you're not even trading into the European close. Okay. And so when I look at this, like, how many of you guys would love a 3 profit factor? It's amazing on that many trades as a scalping system. Now remember, I'm only going in with 240. I could increase this because my other trades are 2 contracts. So this is 2 contracts. Normally, I could go in with 2 contracts. Let's just see what that's going to do. 2 contracts might put you at a little bit more of a bigger, right? Might put us at a little bit over the 400 threshold. Just depends on your risk tolerance, right? Like risk per trade is risk per trade, right? You have to decide how many contracts you want to trade on the micros, you want to trade on the minis. Like it's the same thing. But what's nice is that the volatility movement on one market is going to be the same on the other, right? This isn't a volume system. This is a movement system. So tick for tick, you're supposed to have the same movement, right? So you can see here the max drawdown, like even though my trade risk is a little bit large for my liking, my max drawdown is still very, very doable for a prop firm account. That's the whole point. Okay. Now there's 2 signals. There's a break trade and there's a retest trade. Today we focused all on retests because I've got some really sexy profitable templates for retest trades. Okay. Only if the trade goes in your favor, Ross, will you expect that. Trailing drawdowns only go against you once the trade has been profitable. Yeah. So what happens is everybody goes up in profit and they give it all back, and then the drawdown creeps up on them. Max adverse excursion is good, yes, but depending on how you look at your trailing drawdowns, when you look at your intra-trade analysis, the trade has to go in your favor for the drawdown to creep up on you, right? Well, if the trade's going in your favor, I want to be out as soon as possible with as much profit as I can. And I don't need a lot of movement to take a lot of profit out of the market. I need a system that repeats itself consistently, which means if I have a system that's generating me on average 8 trades a day over the past month and a half, that's a pretty decent amount of trade activity to be able to form a decision around, right? Like when's the last time you logged manually 130 trades in a trading journal and said, yeah, there's my edge. I'm going to go trade that now. Exactly. Yeah. So give me a yes that you learned something from today. I only like leaving these events if I've left value from an education perspective. Yeah, I can assure you I've got a whole lot more than this when it comes to deep dive training. I mean, I dedicate my life to quant trading. I love quant trading. I love algorithms. I love system design. It's like a passion, right? And I just love seeing people make a lot of money, right? Like we built a lot of algorithms, some of them great, some of them outstanding, some of them could use a little work, right? This is easy. This system is easy. And one of the things that we've been getting across the board with Sean, I'm really starting to understand the testing process. I'm really starting to understand how to use the engine, how to optimize. How do I do this easy, right? Well, one of the things that I'm going to do here is I'm going to tell you that there's only 2 things you need to worry about testing in these signals. Is the size of the volatility level and the size of the band. The size of the big level and the size of that volatility band. Our algorithms are going to be able to, when you run an optimization, it's going to tell you how big you should set this and how big you should set this. And that's it. And then you decide, am I going to take the break trades when the volatility band breaks and the rubber band goes snap? Or am I going to take the retest trades when we come back up to the volatility environment, because they're both very effective? Now, if you set these the wrong way, it's going to be very dangerous, which is why we've set these templates up. And I've built 3 templates for the launch. I have 3 templates that we've built for the retest trades that everybody will get. Volatility is the big secret that nobody pays attention to. Yes. Okay. This will work. And here's the here's the neat thing is that I'm all about building templates based off of what the market is telling me to use. So what I love about this system is that it's not about like like volume divergence. Let's take the volume divergence for an example, right? We had a trader post in our community that talked about how it works really great when the market's moving. Yes, but you can actually build these templates in two ways for this system. This system template can be built in a way where you can have templates built for when the markets are really trending, because you can build trend templates, but you can also have a template for when the market's not trending. And you can use all of these templates at the same time as long as you set them on different accounts. Exactly, Rick. Yes. Yeah. And I want to basically talk a little bit about something that I felt was really powerful to kind of add some credibility here. Okay. So one of the things that I always get is, well, do you do any out of sample testing? Anybody in here ever heard of out of sample testing? Anybody here what do you guys think is, you would say it's valuable? Yes. Out of sample testing is very valuable, because out of sample testing is when you take your optimized settings and you don't optimize, but you apply them to a different period of time without optimizing. So what this means is you take the system, okay, and it's like a form of walk forward analysis, but you can't do walk forward analysis without doing live trading. So basically what you do is you create an optimization. So this would be my optimization, my main optimization, right? So I would run a test. I would let the algorithm basically tell me which settings to set and what stops and targets to set and all that fun stuff. And there's my sample size. Okay, I've got about a month and a half. I've got about 130 trades. Really, really good statistics. Okay. But then what I did was I said, well, let's take this exact template and let's put an out of sample test to it to make sure that it's a strong template. Because then this assures that you're not curve fitting your algos. And everybody wants to give me flack about, Sean, you always talk about optimization, but what about walk forward testing? Well, this is an example of walk forward testing. Well, it's called out of sample testing, because walk forward testing is when you deploy the algo in real time in an out of sample environment. But this is another form of outer sample. It's called randomization, or Monte Carlo simulation is probably another example. It's when you take the algorithm and you apply it to a different period of time. So what I did was I basically just took the same settings and I applied it to a much bigger sample size. I added another 100 and something trades to it without optimizing it. And it still came back extremely solid, which to me tells me that this is a very, very, very solid template to be trading, because the exposure to risk is very limited, meaning you're only in the market for very low periods of time, right? Which is exactly what I want to show you here. And this is why I did this example. And this is the example of the testing. So what I did was, this was my optimized sample where basically I tested it over here. And then what I did was I said, okay, let's run it for another 3 weeks before not even testing it, like just deploying the same signal in a different environment. And it was amazing. So this is why I just let it run, and I let the algo run today, and it had 3 wins and 1 loss. So there's another example of out of sample testing. The same template that I ran optimized settings and out of sample Monte Carlo testing was a profitable system today in even really tough conditions. So I'd like to think that this is as far as you can get without going live with the system. Like, it's, you know what I mean? So I've done way more than 99.9% of all quant traders will ever do for their community. I can tell you that, right? So you're at a crossroads. How many of you guys loved today's webinar? You learned something? Give me a yes. We're going to do another AMA for everybody that's using the system tomorrow. Okay. You will not be able to figure this out on your own. Let me just explain this. There is no hard way. It's either you choose the right way or you don't go in the right direction, period. When I mean quant trading, I mean, like, you will not figure this out on your own. There are steps to this game called life, and I've got 10 years of stepping in this direction in quant trading. So what I'm going to do is I'm going to suggest that you don't try to figure things out on your own. You let go of whatever has been going on in the past, and you take something that has merit and use it to your advantage. Okay. So what I'm going to do is, oh, by the way, everything we do here is pre-built. I have these templates already ready. You could deploy them tomorrow, like literally plug and play. You can trade, but here's my request. For those of you that decide to purchase this algo, please do me a favor and be disciplined and just come to the AMA tomorrow first before you start trying to deploy them. Why do you think I'm asking you this? For those of you that are excited about using this, right? You can use these exact templates, Bradley. Yes, you can use these exact same templates. I've built them for you guys. Yes. But why do you think I would suggest coming to the private AMA tomorrow for all the people that own the system? Why do you think I want you to come to that AMA before you start trading the algo? To manage expectations? Because I want to teach you how to drive the bus, meaning I want to show you how to set up the settings. I want you to show you how to test. I want to show you how to do a quick optimization, right? On 1 or 2 days of data, super quick, so you understand how to do it. So you understand how to take the break trades. Like I don't even have a break trade set up here, right? Okay. So John's saying something great, and you're right, man. Like I'm gonna just call a spade a spade. John says, "How do I know there's not going to be a better algo next week?" You don't. And the truth of the matter is I'm going to be developing algorithms for until I choose to not build systems anymore. And I've been doing it a long time. So we're a software development company. We're also a trade room education company, and we develop a lot of systems. We will continuously be rolling out strategies. We have HFT algos coming for order flow. We have supply and demand algos. Like the reality is that we just keep getting better and better at them. You understand that? Like every algo we start building, we do better as a team, and the systems just keep getting better and better. How many of you guys would agree on that? Because many of you guys have bought algos at the beginning and they just keep getting better and better and better. Exactly. This experience in the journey. So I understand that this business costs money. You need to invest in the tools and the resources, which is why I try to do launch pricing to give you guys the best value for where I can. So what I'm going to do, thanks, Sammy. We launch these at 50% off. Okay. It's good for 2 computers. Okay. You can install it. We have all the templates pre-built for you. Everything is set up. You can install the user documentation and the training. We're going to be doing an AMA training tomorrow. Okay. We're going to be doing an AMA training tomorrow. And inside the members area, you'll be able to download the templates that we've built for you to use, which is really, really important to use. And if you're planning on using this algo, now is the time. This is the best time to buy it because it's going to be 50% off. Like it's the best savings you're going to get for this system, right? And it's a very consistent scalper. Like I've built a lot of scalping systems. The VD algo is good. This is a completely different ballgame, right? Like I cannot get 3 or 4 profit factors on any other system so far, right? You don't need to change the settings, Lisa, on this. I understand what you're saying. You don't want to have to go down that path of trying to figure out how to build the car engine, right? But I do want you to understand what they do, right? I want you to come to the AMA and learn how to use the templates and how to use things so that you're not just trying to guess on what, it's really important that if you know what the hammer is, doesn't mean you need to swing it all the time, but you just need to know what it is, right? So you know what it's designed to do, right? So I'm going to give away a free license. Always one lucky winner gets it. Who wants it? Yes or no? Just fill out the poll. We'll give the randomizer 2,000 a draw. If for whatever reason you buy the algo and your name gets picked, then we will give you your money back. We've done it before and we'll do it again. Right? Ronald, I want you to promise me you'll start saying I always win. The moment you start saying I always win, I always win, I always win, the universe cannot deny that. It's going to open up and it's going to flood you with rain showers of $100 bills. The problem is we don't believe it. You control the mindset. Belief is faith, right? If you don't have faith, you have nothing. So I've got everybody submitting their entries. Perfect. So I'm going to end the poll. Okay. Excellent. So let me end it with, end with this, guys. Okay. Tomorrow we're going to do an AMA. We're going to be doing a training. Okay. For those of you that are buying the algo, you're going to come to that AMA. Okay. Because we want to go over some other types of training. Okay. The thing is that we have a support team. I only have so many people on my staff, right? And only a certain amount of them are allocated to helping people get things installed and up and running. And therefore, I need to know if you're planning on participating with this so that I can tell my team what to expect. So let me go in here and basically set this up. Okay. I'm going to run another poll, and I need to know if you're planning on using this system, getting this system, purchasing this algo for scalping. And the reason being is I want to make sure that my team can help you get it up and running and installed. Out of all the algos I've built, I've never yet been able to produce an algo that scalps over a 3 profit factor with this much sample size. So to me, this is why I'm very excited to teach you guys how to do this for scalping, for those of you that like scalping and prop trading accounts, because at the end of the day, like, you know, you could use all the tools that you want, right? We all have a toolbox, but this scalping system, right? This template here is my favorite. Like, this is badass, right? And if I go in and I start, you know, using these settings, like for me personally, yeah, Rick, watch the presentation, brother. Yeah. Ben says downloading the manual is not working, right? So my goal is to ensure consistency. Profit factor ensures consistency, and trade expectation. These are two of the things that I pay attention to most. Profit factor, okay? I pay attention to profit factor. I pay attention to win rate, and I pay attention to average trade expectancy. Everything else to me is just noise, because if I can keep that going, that's consistency for me. And this to me has been a very, very big accomplishment for our team, because as a scalping algo, over 100, and I mean, that's only 60 trades, but I mean, if I can go over here to the full sample size, if you go over to the entire environment, over 100 and something trades, that's amazing from a scalping perspective. Yes. And I just think it's better, like, than some of the other systems I've built, right? Like, I mean, I know I don't like to pick favorites, but this is definitely, it's got a lot more merit than certain types of other concepts. That's why I love building systems, because I can test other ideas, and I never hold a bias to one being better than another. I always try to exploit a bigger edge every way possible, and I will always continue to try to exploit a bigger edge in everything I do in trading, because that's what trading is about. Right? Trading is always about being better, making more, and doing better as a risk manager, right? And as a quant trader, that's the entire focus of quant trading, is being able to ultimately extract a better edge, right? Well, it really just looks, it just depends on the system, Ben, right? You know, you're also looking at the average trade risk. The number of trade frequency is almost 1.5 times. It's just the amount of trade activity, right? So I would run both of them, because they're both going to factor in different settings. Yeah. Yeah. So traders, tomorrow we're going to run the AMA. Okay. Tomorrow we're going to run the AMA, and I'm super excited to teach you some great concepts. We're going to be talking about break trades and retest trades and all that fun stuff. How many of you guys are going to be coming to the AMA? Good. Okay. Fantastic. Well, I look forward to having you guys there. I'm going to break for some food. It's my time now to get some grub in me. I need some food, or I'm going to fall over. Hope you guys enjoyed the event. And I look forward to you know, getting in touch with you. I'll have Jim, our team manager on the sales side, follow up with you with the discount coupon codes and the webinar recordings and everything like that, and make sure that you guys get access to this. We'll create a thread inside of the Discord for ATR Vault Trader, and we'll post the templates for everybody to have in the members area, and you guys are in good hands, right? So super excited to see you guys trade it, and It's a scalper's paradise. If you're a day trader, this is a day trader's paradise, this system. Yeah. Looking forward to it, guys. Take care. Have a good one. Thanks for your attendance. We always appreciate you guys being here. We announced the winner via email, Ishwar. Yeah. Ashley will do that. And if you purchase now and you win, we'll send you the refund via PayPal. Yeah. No problem, guys. All right. Take care.